Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Good to have you with us here at AusBiz. Let's take a look at what happened overnight, billed as Make America Great Again. President Trump has unveiled his plan to make the United States economically independent.
April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed, and the day that we began to make America wealthy again. We're going to make it wealthy, good and wealthy. For decades, our country has been looted, pillaged, raped, and plundered by nations near and far, both friend and foe alike.
Donald Trump says he will propose a minimum tariff of 10% on all countries, which includes Australia. The president singled out Australian beef exports.
Australia bans, and they're wonderful people and wonderful everything, but they ban American beef, yet we imported $3 billion of Australian beef from them just last year alone. They won't take any of our beef. They don't want it because they don't want it to affect their farmers. And you know what? I don't blame them, but we're doing the same thing right now, starting about midnight tonight, I would say.
Well, Prime Minister Anthony Albanese says Donald Trump's tariffs are totally unwarranted, but he will not impose reciprocal tariffs on the US. Well, among the countries hardest hit by the president's tariffs are those in Asia. He slapped another 34% on Chinese exports on top of the 20% he's already imposed. Taiwan will be hit with 32% tariff, Japan 24%, Indonesia 32%, Vietnam 46%, and India 26%. And the European Union will be levied at 20% and the United Kingdom 10%. President Trump saying he plans separate import taxes on pharmaceuticals, lumber, copper and computer chips. Well, US Treasury yields fell in response to the new tariff regime. The yield on the 10-year was down to 4.12, the 2-year at its lowest in 3 weeks at 3.85. The US dollar index last down more than 0.5%, and the euro extended gains during that announcement. The Aussie is trading at 62.5 US cents. Quick look at Bitcoin. It's fallen back to under 83,000 US. Well, global markets remained volatile overnight in the lead up to President Trump's Liberation Day announcement, with gold holding near its record highs and European shares falling. The president detailed his plans after the close on Wall Street, with stock futures having tumbled. The S&P off about 2% and the Nasdaq falling around 4%. At the close, the main indices were higher in a choppy trading session. Big tech names offered support to benchmarks, maintaining the previous session's upward momentum. Tesla reversed early declines on reports that President Trump had told members of cabinet that Elon Musk will soon step back from his government role. The stock initially falling more than 6% after reporting a 13% drop in first quarter deliveries. And Amazon rose after it was reported the company was bidding for short video platform TikTok. Oil prices fell then rose following Trump's announcement. Brent futures settling around 0.5% higher at $75 a barrel. Copper lower, along with iron ore, falling to around $104 a ton. And gold soared almost 1% to $3,133 an ounce. Okay, so let's unpack it all and what we've heard from Donald Trump. Ira Epstein joining us from Linn Associates. Ira, we knew it was coming, and here it is. So clearly markets are going to have to price in a greater growth shock than they initially already have.
Yeah, that's why you don't go into these reports other than, as I told you repeatedly, gold, but I'm going to make a statement. I think now is the point where you start taking some of your gold off. And the reason is you buy the rumor, you sell the fact. What's probably going to happen with all this is, number one, I think the 10% tariffs are here to stay for a long time. It could be the whole term of this president. I think the other parts of the tariffs are where the negotiations will begin. I think Australia did exactly the right thing. It's a 10% tariff. The amount of trade we do with each other, what's the difference? It's not that overwhelming. Other countries will look at it like China. They're going to have, with the 20% combined onto the 34% today, that's 54% tariffs. Vietnam, problems there. So what Trump has done is he's upended the world order. We saw that at one point, because of the trade differences with the U.S. and China, countries moved to different parts of Asia. There was Vietnam, Malaysia. I can go on and on, all the different countries. What's going to happen now is that order is going to change. Now, there will be negotiations. You have to think of this in stages. Number one, he's living up to what he said he would do. And I told you, he's got a 4-year term, that he's got 2 years to really get things done, and then we don't know how midterms will go. So it's a race. As he rightly said, he's 100 days into his presidency, approximately, and he's lived up to his promises. That was his goal. Whether this is good for America or not, that's going to be debated by history. Right now, what's going to happen is a house of pain. Tomorrow morning, traders are going to come in. The Dow tonight has been down 1,000 points. You're down, I'm looking at my board, you're down right now 800 in the NASDAQ. You're down nearly 180 points in the S&P. And the gold market's up $5. So that stands out to me in saying, okay, here's the most bullish event I could have imagined for the gold, and it's up $5. Time to take something off the table. Please don't read and say that I recalled a top. I don't know where the top is, but I see the reality there. And I have been with you bullish since last year when we were coming in. It's been a heck of a rally. Interest rates. The Fed's going to have the markets back. So today, when this came out, you suddenly have 3 interest rate cuts being priced in the swaps market. I don't know how the Fed's going to view this, but what they have to look at eventually is, number one, this is inflationary. So that's a problem for them with cutting rates. So what would only get them to cut, in my opinion, is if the labor market falls. And as you saw today with the ADP numbers, with the factory orders from February at least, we haven't seen that weakness. Why? Because people were hiring to build the inventories in anticipation of this. And now that it's in front of us, the big question is the timing. The service industry in America is going to do alive and well to a degree. Travel's going to get hampered. Airline stocks are going to get hurt. The cruise ships are going to get hurt. Americans are going to tighten their belts. They're not going to be traveling the way that they were. The dollar's been, as you can see, in fact, I'm looking tonight, it's not open, but the euro's down 20 points, which means the dollar, because that's 57% of the index of the dollar's going to be not too different. It's going to be probably okay. It's where interest rates are getting hit, and you pointed that out. So how do you play it? Well, number one, let the emotion come out of the market probably for maybe the rest of the week. And then have your shopping list and go shopping for stocks that you think in America that are phenomenally great and that will survive this. That's probably the way. I can't give you names. I'm barred from doing that. But that's the concept that I think you can go with.
Ira, just looking at one ratings agency out of Europe, in fact, pointing to the fact that their global growth rate, they had at 2.7% in December. They have cut that back to just 1%. We're going to see a massive readjustment there, just as far as particularly those growth projections. And then, of course, you've got to adjust that in terms of forward earnings.
Yeah, for everything. And I want to make that clear. This is a global adjustment. This isn't just America. The Trump administration, and Trump specifically, wants to cut American taxes. He needs to get the money from somewhere. What this is going to do, these tariffs, is it's going to hurt the American economy. It's going to hurt jobs. So he's got to make it up from somewhere. So what you, being Australia, me being America, everybody has to adjust to is this 10% tariff. I think if you build in that it's coming off anytime soon, I think you're making a grave mistake. Could I be wrong? Of course. I'm like Swiss cheese. I'm wrong a lot. But that's how I'd be playing it. And I'd look for the negotiations in earnest to begin now. I mean, really in earnest, where everybody starts talking, but nothing to happen probably until a month goes by. And then Trump lets the dust settle and starts saying, look at how we won on this. Look at how we won on that. That's his ego. And that's what he's looking to do. And countries will do that. And what you will get is these additional amounts coming down, but I don't think the 10% is going away.
So expectations then are this volatility is going to continue because there's still that ambiguity there. Markets hate uncertainty. As you point out, no reassurance that when these tariffs are going to come off. and whether there is room for negotiation at this point.
Well, actually, I don't agree with you on that. Number one, I think that now there's more certainty, just the opposite. We now know what he's done. So now the next phase is the negotiation phase, but he has to gloat with this for a while. Look what I'm doing and look at how everybody's running to us. The first phase is going to be who's going to attack America with their own tariffs. You know that's going to come. Not everybody's going to do what Australia did. I don't know how Canada's going to react, Mexico, Japan. I don't know. We'll find out. But what can they do? The bar from the biggest buyer in the world is just change. You want to do business in this country, you cannot do it the way that you were doing it. And permanently, your good is going to be more expensive under the Trump administration. I don't know who's going to be the next president, but under this one, for 2 years, I think you will keep that 10%. And then at midterms, maybe he makes adjustments. So I don't think that 10% is coming out of play for quite a while. I think it's a chip in his pocket and a serious.
But is he going to run out of time, Ira? Yeah, I mean, you mentioned that time frame, obviously 4 years, perhaps even just 2. And of course, you talk about reshoring or onshoring those businesses. Building a new factory, for instance, that's going to take years.
You got it. You hit it right on the head. So partnerships, that can happen. There's no reason that you can't see companies come in and buy with it. You know, Nippon Steel is a great example. I realize there's other bidders, but they're the logical one, coming in with $7 billion to refurbish the factories and do things. That is one way to get it done. Freeport-McMoran CEO was on the other day on TV, and she was mentioning, even if they wanted in copper today and they had billions to put in, by the time you get the permits, by the time you dig the mines, by the time you get the machinery to process it, years go by. That's why you have certain exemptions on things. And that's why I told my clients, I said, the market you don't want to be long now. And I said this 2 weeks ago. I said, you're going to see copper flooding America from abroad. The spread between LME and the COMEX was nearly 17 to 20%. You can ship all the copper you want at that if you've got it pre-graded. You're going to make that type of money, not the 17. You take out the shipping cost, and you're where you're at. That's a pretty good return. So the trade houses that do that, you want to take a look at their earnings. They're going to be stellar.
Ira, terrific analysis. Thanks for joining us from Linn Associates.
Thanks for having me.
All right, let's focus on what we're likely to see this morning locally, at least bucking the trend there, although that may well be short-lived. That was perhaps reflecting more of what we saw initially before Trump made his announcement, so SPY futures are up 0.5%. Stay with us. We're going to unpack it all, look at the local consequences in just a minute or two.